In this video, I'm going to be breaking down my $180,000 week, which is actually my first ever 100K week ever, and by far my biggest week I've ever had in my life. And honestly, I never even thought these numbers were possible. But I'm going to show you exactly how I did it, the way I was able to find some of these stocks, and the way I'm able to find the right stocks before they blow up, as well as showing you exactly the entries that I took, how I managed to trade, how I was able to hold some of these winners for so long, and also how I risk managed these trades, because I didn't win every single trade, and nor should you, and that shouldn't be your focus as a trader. It should be looking for the best risk to reward and playing the best setups and the A+ setups within the market. And this video is going to break down exactly that. So let's get straight into it, and I'm going to show you exactly how you can use the strategy to make thousands of dollars in the market. All right, so the first thing you want to do as a swing trader, and even as a day trader, just any trading in general, you want to look at how the market is setting up. What this is going to do is basically give you a good idea of what the markets are doing and how you can correlate your strategy to the momentum of the market. Meaning whenever the market is breaking out, for example, like the S&P is breaking out here, you want to be long stocks and be super aggressive. And knowing this tells me, okay, this is where I want to be really playing breakouts and I really want to be stepping on the gas pedal. But when the markets are, for example, making a range, and they're not really making new highs, right? And they're not really making new lows, this is where you want to be a little bit more cautious. So this is usually when I start buying off the exponential moving averages instead of buying breakouts, for example. But when the markets are clearly trending and they continue to make new highs, right? This is where you want to be really stepping on the gas pedal, and you want to be playing some of these breakouts on individual stocks, especially the leading stocks in the market. But you always want to start on the markets like so. You want to see what the market is doing, and you also want to know which theme and sector is moving well. So for example, the S&P has been performing pretty well, but IWM over the last few days and weeks has actually been slightly better. You could see over this low right here since August, it's actually been moving a little bit better, right? It hasn't really been ranging as much as the S&P. It's been making new highs, holding above and kind of pushing higher, whereas the S&P kind of been ranging right here for a while, right? And IWM did not do that. So knowing which theme and which sector to trade is one of the most important things to do as well. So now that I understand, okay, the market's clearly in a pretty big uptrend, then that's when I can look for breakouts. So with that, we'll go over the week and kind of explain exactly which trades I took and why. So the first trade that I took in the beginning of the week last week was on the ticker UNH, but this one was one of the bulk of the gains that I made on this week because I started selling it only, this week. This was a absolutely beautiful trade that was actually taken off the moving averages. And the reason why is because you can actually see on September 3rd, right? September 3rd, the S&P was still within the range. So it's actually this day right here. The S&P was still within the highs and the lows. This is why I was not trading a breakout on this ticker UNH, and why I actually ended up buying it off this 9 EMA. And this is the exponential moving average, and this is usually what I use for my trades. So you can actually see right here, I bought this stock right here, and then I sold it at the highs as it broke out and made a massive move. So I bought this one right off the 8 EMA. If we go in the lower time frames, you can kind of see this a little bit better. On the ticker UNH, you could see it was setting up in a massive daily base, but this is a stock that was downtrending, right? These are usually not stocks that I would trade. Now, the only difference and the reason why I started looking at this stock is because it gapped up on an ignition candle. So if you're looking to play a reversal, you never want to be too early and look to bottom tick something, right? You're not going to catch the bottom. You're probably going to be buying a knife. Instead, what you want to wait for is something called an ignition candle or the change of trend with the moving averages. So you can see whenever stocks are below the moving averages, like here, they're clearly in a massive downtrend. But when they start to get back above the moving averages like this, they're now starting to uptrend again, and they're likely to continue to go higher and use the moving averages to go higher. This is why I love the moving averages. It makes trading super simple, and also it makes it so that we don't have to worry about the trend changing on us, because we know that as long as the moving averages hold, the trend is usually going to be on our side. So this is why I use this 8 EMA buy right here. So you can see I had a really nice setup, and actually on this setup I did try to buy the breakout earlier right here. I got stopped out, and then I bought it again at the 8 EMA, and that was the market telling me, okay, breakouts aren't working as good in the beginning of the month because the market is still a little bit choppy. So now you should be looking to buy into the key moving averages. So that's exactly what I did. So going on the 15-minute time frame, we can kind of see exactly what I was looking for. And this had a very nice kind of setup as well. It was setting up within this kind of pennant base type of look. And that's kind of what I was looking at for this move. So this was right here when I bought it on Wednesday, September 3rd. It came into the 8 EMA. You could see I had a ton of volume off the low, and I actually bought it right here as it held the 8 EMA on the daily time frame, right? So I'm using the daily time frame, but I'm showing you on the 15 minute to see how price kind of reacted and how it looked. You always want to wait if you're buying a bounce of support or a rejection of resistance, for example, for puts. You always want to wait for volume to confirm that that level is holding. You don't want to just blindly buy the stock off that level. You want to look at the lower time frames, and what you want to see is something exactly like what happened here. You can see volume just comes in, right? So volume is always going to confirm to you if the stock is going to move or if there's buyers really coming at that really, really big level. So that's exactly what I saw on this ticker right here. That's why I bought it. You can see I ended up buying it on this day right here and ended up running really well. And another thing that's really important is you could see my trailing strategy, right? My trimming strategy. I didn't just take profits whenever I was up a little bit. For example, right here this day, I could have taken profits, but you must have an exit strategy. You can't just say, okay, I'm up 20%, I'm going to take my profits off. No, you must wait until your targets are reached, because what happens is that's going to develop your discipline, and it's going to allow you to hold your winners for longer. Because if your plan is to buy the stock right here as it's, pushing out of this base, it's going to probably make a big move. So you want to target some key levels of resistance. You don't want to just sell too early. So I sold on this day right here. I sold another on this day right here. So far I only have 2 trims left, and I'm still in this position, right? A lot of people could not hold this position still. They'll kind of get shaken out. They'll see this big move down and they'll kind of get scared. And I'm still in this position because there's no reason to sell. The 8 EMA is holding. Look at what happened the last, few times the 8 EMA touched price. Held right here, right here, right here, right here. There's no reason for me to sell. And I'm already up like 90% on this position. I'm just moving the stop up to break even, right? At this point, all I'm doing, stop goes up to break even, and then I'm just continuing to hold the rest of the position. And if it comes back down to break even, it comes back down to break even. You do lose some profits, of course, that you had from, the unrealized portion of the move. But if the stock ends up running and making an absolutely insane move over the next few, weeks, then I'm going to miss out on these profits if I sell too early, right? So you never want to sell too early. This is called having a proper exit strategy. And this is why I use a trimming strategy like so, and why this is probably one of the best ways to trim out of position. So that was the first trade on UNH. I'm still in this position, and this one really made me $30,000. Just one trade made me $30,000. Look at this. And again, this is still open, so I'm still up about 25,000 on the rest of the position. Sure, could it come all the way back in? 100%. I already realized about $30,000, so I'm totally fine with that. And that's a part of my trading style, and that's exactly how I trade. It's called swing trading, and it's called holding your winners for a long time. So this was the call that I took, the 116 call for 2026, so about 3-4 months out. The 350 call, which was quite out the money, but it gave me leverage, and that's why I made such a nice return. And now I'm going to continue to hold the rest of the position. The next trade that I took was on the ticker open. Now this is one that had to do with IWM and rate cuts. So we talked about this a little bit. Rate cuts were super, were kind of driving small caps, or the potential of a rate cut was driving small caps to the upside over the last few weeks. This is why IWM was so much stronger than the rest of the market. And stocks like Open, which are super rate sensitive, so if you look at this chart right here, just went absolutely bonkers, right? Now, this would be a good, setup to show you guys that even when you do the right things in stocks sometimes, you don't always end up it doesn't always end up the way that you wanted it to. For example, this one, I actually bought it right here on this day as it was breaking out. And I ended up getting stopped out of the rest break even right here. And the next day it gaps up 70%. So sometimes you're not going to be able to control what the market does. The only thing you can control is your risk and your risk management. Sometimes you'll have trades like this. You'll literally have trades like this, but other times, the trades will run. So this is why it's always so important to have a system. And this shows you don't even have to be perfect. Like, I could have done so much better over the last few weeks, and I would have made probably way more money, but I wasn't perfect, and it's okay, right? It's part of, the deal. and you're not going to always be perfect as a trader. So let's review this trade really quickly. This was again on the ticker open. This was a stock that was already uptrending and had a massive move off this low. Ideally, the best time to buy this stock would have been right here. The reason why is because this is where the start of the trend really kind of started to happen. It had this big first move, and then from there it kind of just went like sideways, made this next leg up. This would have been the best, spot to buy it on the breakout. However, I didn't really, I wasn't really able to catch this one here, or I wasn't watching it, whatever it is. This wasn't really on my radar. And then there was another, shot right here to buy it as it was breaking this day, but I didn't catch it then. So instead of FOMOing, buying here, having FOMO and chasing this, I waited for it to set up again, and it did exactly that. So look at the 8 EMA. It's exactly what we talked about on the last trade. This stock has been holding the 8 EMA beautifully. It held the 8 right here, and then it kind of popped. It broke out of this flag right here, and I bought it over the previous day's high, which was right there. My stop loss was at the low, and this one ended up running pretty nicely, right? So I sold a lot on this day right here because it hit my first TP, which was this level right here. And then I sold a lot on the next day as well right there because it hit this level right here, which was 6.4, which was my second TP. Now, this one did not hit my third TP. So what I did was I moved my stop up to break even. And even though I bought the stock, somewhere closer to this level right here, I still ended up getting stopped out break even. And this happens a lot with options. The options will decay a little bit. And guess what? Next day, it's up 70%, and I would have probably made about $50,000 on this trade, which would have added to the total and would have been absolutely insane. But that's a part of trading. You can't always get what you want, and sometimes you're going to get stopped out. And for this trade specifically, there was no really like an entry opportunity in my opinion, because it gapped up through the spot. I couldn't really chase it. I didn't really want to chase it, and then it was just kind of gone. But again, remember, no FOMO, right? Now we just wait for it to set up. And if it sets up, then we can look to buy it. But it has to have a proper setup. And even though, this could have been such a better trade, I'm still not mad about it because I did exactly what I had to do. I followed my system. I made sure that I was disciplined, right? And I did not FOMO. And that's what you should do as a trader, because at the end of the day, you're going to get really good opportunities. And if you FOMO, if you mess up, if you have bad habits, what's going to happen is you're going to blow your capital before you even get the chance to hit a, massive trade the right way. And that's what ended up happening to me later in the week. So that was the trade that I took there on open. I made about $6,000 on it. So, by no means is that a bad trade at all, but I didn't, have any big moves on that one. And this is when I trimmed it again this day right here. And then I opened 2 more positions. So one of them was on the ticker PSKY. This was another one where I got, a little bit unfortunate with news, because actually this one ended up going kind of insane the next few days. And I got stopped out break even on this one. So let's look at the daily time frame on this right here. You could actually see I bought it on this day right here as it was breaking out of the base. And I sold it right here into my first target. It stopped me out, and then look what I ended up doing. It absolutely went parabolic pretty much. And this, again, probably would have been another, I had 20,000 in this position. This one probably would have been another 100,000 gainer if I would have, held it all the way to the highs. But again, the moral of the story is you must stick to your rules, because you don't know what the stock does, right? What if it breaks down and then goes down, 50% from here and you get absolutely destroyed? You always have to manage your risk. That is the most important part when it comes to trading, and especially if you're going to be trading options, because they have so much, leverage. It's just going to be super risky. So this one, I literally only made a 5% gain, right? And that shows you that sometimes, you're not always going to make tons and tons of dollars off of every single trade, but it's about managing the trade the right way. So what ended up happening on this one, I bought it as the stock was breaking out of the space right here. It went a little bit the next day, and then the next day it kind of really got momentum, but it didn't have any follow through. So it hit my first target at the highs right there. And you can see my executions. I ended up selling a good amount of this one at the 0.97 level. However, I got stopped out the rest at break even. So I got stopped out $1 above break even. So I made $259 on that. And that happens, right? That's what happens when you set your stop to break even. Same thing happened to me on the open trade. And it is what it is. You have to go on and you have to, move on to the next trade and understand that, okay, the system actually saves me more than it harms me, right? So even though this ended up running, usually most of the time the system does save me. And moving up your stop to break even, locking in profits is the right way to go about it. And that's what happened on this ticker right here, PSKY. Now, next day I had a few good trades. The first one was on the ticker Goldman Sachs. This one was another textbook breakout idea. And this is when I had already started to realize that that breakouts were working, right? So this is already Thursday, September 11th. So if we go on the charts and we look at the S&P, notice what ended up happening around, Thursday, September 11th. Look at what was going on, right? The stock is breaking out. So if the stock is breaking out, if the S&P is breaking out, then now I know, okay, I can look to buy stocks for breakouts, right? So there's a difference between that and what was going on right here. So that's why I bought a breakout on this ticker right here, GS, showing you guys the daily time frame. You could see I bought this day as it was breaking out over this level. So this was a beautiful base. Going back to TradingView, let's look at it right here. Beautiful, right? It broke out on a ton of volume. It has exactly everything that I teach, exactly everything that I look for. Stop loss goes to the low. I ended up swinging this one really nicely, ended up catching a nice move all the way to this high. I'm still actually in a few of this because there's no reason for me to sell, right? It's above my buy, which was right here, and it's above the 8 EMA, which is exactly what I want to see to hold the stock. As long as it holds the 8 EMA, I'm going to continue to hold it. So no reason for me to sell yet. And yeah, you can see actually this position's still open. And so far I've made $7,000 on it. See if we can continue to get more TPs. Unrealized, I'm still up about like 10,000 on this one. I just haven't sold the rest of the position. So I want to see if it can continue to run. Again, you never want to sell too early, right? I move up my stop to break even. So I am risk managed in that way, but I am holding for a continuation move. So going back to the dashboard, that was on the ticker Goldman Sachs. And then the next trade that I took was on the ticker NIO. Now this one is one that actually had a pretty big gap down after I entered it. So if you look at the daily, I actually entered this one on this day right here. And then this day they had an offering. So very bad news for the stock. It gaps down, and it actually gaps down below my stop loss. So my stop loss was 5.9. However, obviously, overnight gaps, you can't sell the stock, especially if you're in options, you can't sell overnight. So you have to wait for the market to open. And what I was looking at for this one to really kind of get an idea, okay, do I have to get out of this position or could I stay in it? Is I was waiting for the 30-minute orb, meaning if you go down to the lower time frames on the 15-minute, I was seeing if this one was going to break down of the base. So this is what I do whenever a stock gaps down below my stop loss. A lot of people always ask me, like, Sean, what do you do? Stock gaps below your level and your stop loss level. Do you just take it off right away? I never take it off right away unless it's like drilling right off the open with a ton of volume. I wait for the opening range to form. So opening range means the stock doesn't make any new lows and it doesn't make any new highs. It just kind of stays within the range of the candle. If it breaks the low, then I'll take it off, right? If it breaks the high, then I'm going to keep it on. This one actually didn't do anything. It just kind of went sideways the whole day. And that's why I didn't take it off, because it didn't break the low, right? Then the next day it kind of ends up coming back up, and then you can see it ends up running really well. And this is why I use this system, because sometimes, you don't want to sell too early, especially when there's a gap down, especially in an overreaction move like news. You don't want to sell too early. And this actually, helped me stay in the position. I sold some here. And then I sold a few more here. And the reason why I trimmed more than I usually do, especially since I don't think I hit my second TP yet on this trade, is because we have FOMC tomorrow. So whenever we have like data and big news events, and I've already made so much money over the last few weeks, I want to be sizing down into it. I don't want to become, too emotional and be like greedy and not be humble. Like the market's going to humble you very quickly. So you want to make sure that when you have profits and when you have gains, you take those gains, right? You keep your winners like on for longer with, stop at break even, risk managed the right way, risk free, but you don't put on too many new positions with a ton of size. Because what that's going to do is make it so that you have way too much leverage, you're way too emotional, and you're going to be trying to go for massive days every single day. And sometimes the market doesn't allow for that, and you're just not going to get a big move. So that was the ticker there, the trade there on NIO. I'm still in this one. It's holding really well. So right now, these are all my open positions. These are all moving really well, so no reason for me to sell. And then this day right here, I didn't take anything new. This was just some trims. When it says trades on TradeZella, it doesn't necessarily mean I took a trade on that day. These are just me taking, some positions or closing the trade completely. So I completely closed open, Oscar, and PSKY. And then this is the day that I made $139,000 in one trade. This is my biggest trade ever by far, right? And I am still in this position. You can see it's still open, okay? Absolutely insane. I'm still up about 50,000 on the rest of the position. I'm probably going to start closing it out because it's September 19th. But this is probably one of my best trades ever. And the crazy part about this is a setup that I've been watching for the last, I'd say 3-4 months, right? Massive base. This is the exact setups I look for. And this is exactly what I teach. The reason why is because these setups don't come ever so often. They really don't. These are setups that come maybe once a year. There's maybe once a year this good of a setup with a massive weekly base. Because keep in mind, the biggest moves in the market happen because of the bigger time frame. So on the weekly, whenever you get a breakout, you get massive moves. And Tesla's just been setting up on the weekly time frame for so long. It wasn't making new highs, it wasn't making new lows, and I just had a feeling that it was finally ready to go. And I caught it exactly when it was breaking out. So what I was looking at for this one was clearly a daily base, weekly base, and look at the volume patterns, right? Every single time it gets bought up, high volume, high volume, high volume. It did have earnings here where I had like this little, move down on high volume. But then since then, high volume, buy up, high volume, high volume, high volume. So clear accumulation, institutions are buying this, and it was setting up in a massive base. The next thing I started to notice was it was making higher lows. So right here, I made a higher low, higher low, higher low, higher low, higher low, higher low, right? Higher lows basically mean that buyers think that, okay, this stock is now worth more and more and more and more, right? And they're protecting these levels. And that's when it tells you the stock is ready to break out. So when I saw that it gapped up right here and it made a higher low, I actually had a feeling that it was going to break out. Now, the craziest thing about this trade is this wasn't even my first attempt at Tesla. So I actually bought this one on this day right here. So the day before the breakout on Wednesday, because I thought this day was actually ready to go, right? So I bought it somewhere right here as it was pulling in. Now, in hindsight, obviously, this was a little bit of a early entry, and I knew that, which is why I sized a little bit smaller on this. I ended up getting stopped out, but instead of going home and crying and saying like this is never going to work, trading is never going to work, what I did was I continued to watch the stock because the setup was still beautiful, and I just bought it the next day, right? You have to be able to accept you are going to be wrong. Sometimes your timing is not going to be perfect. You don't want to hold and pray. You can always re-enter the position. You don't want to have regret that you didn't sell, but you want to be able to get back in if the stock does go. So what was I seeing on the day that it actually went? Obviously, the daily setup we saw. The lower time frames is what I really want you to focus on. So go on the 5-minute time frames and look at this right here. So right off the open, this stock had pretty decent volume right here, right? So this is 930, which is the open. Now, all stocks, usually 99% of stocks have the highest volume that they ever have right off the open, right? If you start seeing a stock get higher volume than the open during the middle of the day, right? So you can see this one actually had it multiple times, then you know that's a volume anomaly. And that confirms to you, okay, there is some crazy volume coming in right now. Institutions are buying, a fund is buying, someone is buying, and this is going to absolutely rip, especially if it's through a key level. Now notice what happened right here. That's exactly what it broke. That key level that we talked about, if you look at the daily, that level that I drew out is that key level, right? Notice how every single time the stock tested this level, rejected, rejected, rejected. So I bought it right here. You must have the patience, guys, to wait for these type of setups. These are literally the setups that can make your whole year. I made $139,000 on this position. I still have November calls on Tesla as well that I'm holding. And if you can catch one of these a year or a few of these a year, you could literally make your whole year. And this is really all you need. And you have to have the patience to wait for these types of setups and really be locked in when they come in, and make sure you don't miss these setups. You cannot miss these type of bases, no matter how many chances it takes to get in. Worst comes to worst, you get stopped out for a small loser. You take it, you come back, you wait for it to make the move. And that's what I did on this one. So really nice trade. This is probably one of the best trades of my life. And again, I'm still in it. That's the craziest thing, right? Like, this isn't a trade that you just sell everything after I made a 3-day move. This is a stock that can move for months. Look at what it did here the last time it broke out. Massive move, went sideways, and then boom, next continuation move. So that's what you want to remember about these stocks. They don't just stop going up. And if you catch these in the right time, you're going to make a ton of money. And that was the trade that I had there on Tesla, which basically made the next few days, right? So I trimmed most of the position here, then this day right here. And let's see if there's anything else that I took that I'm forgetting. Oh yes, the last trade that I took was on the ticker BMNR. And other than that, that was the last trade that I took. So this was a trade that I took right here on the daily time frame as the stock was breaking out on this day right here, right? So what I did was I waited for it to break out of this level right here, and it broke through that spot. I bought it, very tight stop at the low of day. This one so far has made me some pretty good money as well, $11,000. I'm still in a good chunk of this position. So it's risk-free, of course, but I'm still holding it. So a lot of it's not realized. So I'm still up about 30, 40,000 on this one. But it's been moving really well. It broke out of a massive base. Also, look at the daily. It broke out of this big daily wedge, and I bought it right here. Stop went to the low, and I'm still in this position. I'm going to let it ride. And again, I'm not taking profits too early, right? My first trim was at these highs right here, which I took on the following few days. And then the next position trim is right here at $70, and that would be my next exit area. But I'm never selling early. I'm always waiting for the trade to play out. And this is exactly how you want to trade. You want to trade based off of levels, based off of your system, based off your rules, off your plans, and not based off of your emotions. So yeah, guys, that brings my total for the last year and 9 months to $1.6 million off the market. Pretty incredible. You could see it was a little bit slower over the last few months when the market was going sideways, but all you need is one good trade. I made $200,000 in the last week. So this is motivation for you to be able to find these setups, to be able to wait for these setups, have the patience, stick to your system. And this is the type of money that you can make as well if you do things the right way. Hope this video helped out. I hope you learned something, and I'll catch you all on the next video.